More and more investors are getting caught up in the current Bitcoin craze, but just what is Bitcoin and what are the tax implications surrounding Bitcoin transactions? The IRS is interested in making sure that all Bitcoin transactions are fully reported and the taxes get paid. Joining us now is Professor of Agricultural Law and Taxation at the Washburn University School of Law, Roger McEowen. Thanks so much for joining us, Roger. A lot of people don't exactly understand Bitcoin. Can you explain it to us and those who may be unfamiliar with it?
Well, good morning, Christina. Sure, this is kind of all the rage right now, but there's a lot of confusion about what actually Bitcoin is, and I think even the people that are getting into Bitcoin may not have a good understanding of what it is and why the IRS is interested in it, too. But what it is a digitalized type of currency. It's what we call a cryptocurrency that serves as a worldwide payment system. It's not a tangible item of property. It's just a balance that is maintained on a public ledger in the digital cloud, along with all Bitcoin transactions as a decentralized digital currency. So it's one of these networks that operates as peer-to-peer with transactions occurring directly between users. So these transactions are anonymous, but they can be verified by network, what are called nodes, and are recorded in a blockchain ledger.
Okay, so is Bitcoin the same as cash, and can you give us some examples of how it's used?
Well, no, IRS does not think Bitcoin is cash. If it were cash, then a person engaged in trade or business involving Bitcoin, if it were cash, would have to report on a Form 8300 a transaction in which more than $10,000 in cash is received. But IRS says, no, it's not cash. In March of 2014, they actually stated that all virtual currencies, including Bitcoins, would be taxed as property rather than currency. And so that means that your gains or losses from Bitcoins that are held as capital will be realized as capital gains or losses, good tax rate on that, while Bitcoins held as inventory will incur ordinary gain or loss, higher tax rate on that.
Okay, now the farmer might be wondering, what does Bitcoin have to do with ag, if anything at all?
Well, it has to do with ag in the sense that we have farmers and ranchers that are caught up in the current Bitcoin craze that's grabbing everybody out there. So nobody's exempt from this. Farmers and ranchers are getting into this. There are thousands upon thousands and actually millions of transactions that are occurring in the United States every year involving Bitcoin. Some of those involve agricultural producers.
Okay, I mean, once again today, Bitcoin is making a big surge. What do you think we're going to expect to see going forward?
Well, I think we can expect to see IRS sticking their nose in the tent on this one. In fact, they had sued one of the Bitcoin companies out there, virtual currency exchange called Coinbase, and they wanted all of the records of all of their customers for multiple years and all of the transactions. And they have thousands upon thousands of account holders and millions of transactions, and IRS wanted all that data because what they're seeing is I think, the ability to assess penalties. It's $250 per return where you're not reporting Bitcoin transactions where you should have. And there's no upper bound on the total amount that IRS can collect.
Wow. Okay, we'll have to see what happens moving forward as the craze continues. Roger McEowen with the Washburn University School of Law, thank you so much for joining us today.